to watch without a doubt. Thank you, Kevin Hanks. Great to see you. Let's get a look at the bigger picture. Mindy McIntosh is with us, founder, CEO, McIntosh & Associates. Before I get to the volatility we're seeing this week, what were your thoughts from last week? We had the Fed move and then the rest of the week. Some of your thoughts.
Yeah, hi, Nicole. I feel like last week we were anticipating that half a point cut. We really feel that when we're taking a look at interest rates more at a level even keel now, we're needing to see folks being able to kind of flee into the job market so we don't see that so softening, because otherwise we just worry about being in a recession territory in the future. So this was all big news. There were several big factors that came last week that I think really are instrumental to the consumers in that we serve. And I also think it's a key factor, even to think about what happened last week. We're just kind of telling our folks to just pause a little bit on either buying or selling a home in just these next couple of weeks. Let's kind of let the even keel ground kind of level out. We'll see what happens to those rates on mortgages and such. And we really want to see what continues to happen as we stimulate economy, with hoping to see more folks in the job market, more jobs actually being consumed, and just not seeing those unemployment rates so high. I feel that will continue to help the folks that we're serving actually as they're looking at the future. What does it mean for them and their investment accounts, their income? They all kind of come into fruition for our folks here.
Yeah, understood. I mean, this week we're expecting a few things, including inflation print, right, that the Fed loves to look at. The next time the Fed will meet will actually be in November and December, and many people are thinking 25 for more cuts to come. And less worried about inflation risk, more worried about labor risk. Any thoughts on this Friday's PCE or the big picture there?
I feel big picture there, we really need to take a look at what are people actually doing today, tomorrow, next year, and 5 years from now. So some folks are still very worried about what's happening with interest rates and inflation, and where is that actually going to key into them when it comes to, let's say, almost their money standpoint of what is their timeline of how they're saving for retirement, or even folks, better yet, that are already in retirement. How do they continue with the folks that we serve? And the question we hear, number one, is do we have enough money? Are we going to be okay? So we start looking at factors of taxes, right? What's Social Security looking like? How are they going to handle an income plan to help pay for Medicare as we come into that season this fall? So they really want to know, are there investments that they're currently doing today? Can it sustain them? And how are they hedging as we get older? What's happening for our bond alternatives that we really need to take a good picture and key factors into? How are those making sure that our folks can withstand and withhold the prices that they're paying day in and day out? And then on the flip side, how is that going to affect folks that are actually looking, like you talked about, labor industry, jobs? What's that going to look like in each communities, each network of communities, continue to keep pumping funds into the areas? And how are they going to feel successful to be able to keep doing the things that they want to do for travel? Even from a personal standpoint, we are always telling our folks, either way that we look at both of these pictures, they're equally as important, we feel, as a firm. So just continue to keep good mental stability, stay active and be real well, and then let us, and folks help them out with what's happening with financial side of things, income and expenses. And a lot of folks just are cutting back a little bit on what they're actually spending their dollar on these days.
Okay, yeah. Tell me what you would say to investors for equities and for bonds. What's your advice? Because they want to make money and certainly keep the principal too. Some are willing to take a little more risk. What would you say for equities?
So it really depends on the folks that we're servicing, really depends on just their age, and are they still in the job market? How are they earning their funds? What is that actually looking at from that standpoint? If they're in the equities, we're still, saying, hey, make sure we're looking at a lot of different tech and AI inside of their compartment zones, and their ETF portfolios is mainly what we're looking at. How do we diversify that, though? It depends on how many years to retirement. How much risk are you willing to take? If you're someone that does not like as much risk and you want to mitigate some risk, we really still need to look at some bond alternatives that are helping to hedge interest rates, stay ahead of inflation, so that we're not just doing this, market portfolio of, a 60-40 market bond portfolio. Those days are gone. We want to make sure that we're helping folks really to rebalance their portfolio, take a look at what's happening in the S&P and the markets, what sectors are performing well, and then utilizing their bond alternative to hedge interest rates so they can sustain that for the next 20, 30 years of their life.
Do you have any sectors that you seem to favor at this time, or particular bond investments that you favor at this time?
We're really going bond alternatives. We're using outside indexes and or even some treasury rates that are looking at our bond alternatives, because we really want to make a pension-like income inside retirement accounts for our folks. So we need to hedge inflation by doing so. Using bond alternatives allow us to do that in some indexing sectors. And then on the forefront of, where we're still feeling pretty bullish as a market, as we do feel that, it's going to be the tech, healthcare, AI, for folks to be able to have a good footprint there, just not too much in any one sector. We still want to diversify for the retirement made clear path.
Yeah, thank you. Mindy McIntosh, McIntosh and Associates. Thanks so much. Great to see you, Mindy. Thank you.
You too.
Coming up next, Options Corner, and Tom White is standing by. He will highlight unusual options activity from the day and how investors are looking to trade on recent news of Amazon, Tesla, and Micron. We'll be right back, folks.